we're going to a different economy, and we're going to be learning more about that as we go. But clearly, we're learning that things can be done from remote locations. We're learning that technology can replace people even more than we thought.
We're not going back to the same economy. We're recovering, but to a different economy, and it'll be one that is more leveraged to technology. And I worry that that is going to make it even more difficult than it was for many workers.
In Silicon Valley, and my friends who work in technology know that what we did to the manufacturing workers, we are now going to do to the retail workers, the call center workers, the fast food workers, the truck drivers, and then even bookkeepers, accountants, insurance agents, lawyers, and on through the economy. So what happened to the manufacturing workers is a very clear sign.
This effort. And China has big plans for this. They intend to seed their digital yuan into the global environment by giving it away to visitors at next winter's Olympics. When they arrive at the airport, they're going to get yuan digital wallets. They're going to receive digital yuan. They're going to use it throughout their visits to Beijing, and then they're going to take it back to their home countries. They see this as a huge advantage. Why? Because who controls the underlying protocols, who controls the underlying standards of the future of money will control the future of money.
Welcome to the Crypto Teacher. And guys, I come back with that video just to make you think. And we have Elon Musk, the puppet, comes out again and swings the market. Now, who does this remind you of? That's right, Trump, guys. We know Elon Musk is getting cryptos ready for Cnbc conversation. Now, we know Elon Musk is going to get billions and billions of dollars from the government renewable contracts. Everything that Elon Musk is talking about Bitcoin as far as with the energy use, we already know he knew this already. We know he's already invested in renewable energy. We know about Energy Web token and his connection, Warren Buffett. I've done several videos on Elon Musk. I've proved time and time again he's nothing but a puppet. He's there to distract the masses. While you're looking one way, the Fed is moving the money out the back door. And don't forget what's going on in Israel. China has called them out. And remember, United States was always the so-called, the narrative peacemaker. Now China is going to step up as that peacemaker. The fall of America, the Babylon, and the rise of the dragon in China. Remember what Anthony Sutton taught us. We funded China. China's leading us into the fourth industrial revolution, and we funded that, guys. Same way in Israel. We fund all that technology. Now, also, guys, I'm going to leave you with this video. Wonderful video, Yahoo Finance and CoinDesk, showing how Elon Musk is moving the markets. But guys, we know, the conscious people know, it's the Fed. But Elon is nothing but the distraction. Because remember, when it comes to the New World Order, everything is planned out. Y'all have a wonderful day.
Elon Musk, his tweet was earlier today regarding the Tesla situation. We are concerned about rapidly increasing use of fossil fuels for Bitcoin mining and transactions, especially coal, which has the worst emissions of any fuel. Tesla will not be selling any Bitcoin, and we intend to use it for transactions as soon as mining transitions to more sustainable energy. There are a lot of loaded comments in that to help us make truth out of what might be a new big lie. We're going to invite into this stream the Director of Research from CoinDesk, Noelle Atchison, and it's good to see you again, Noelle. Let's get right to that whole thing.
Thanks so much for having me. Great to be here.
You're welcome. Green energy and this discussion we have among all our friends that Bitcoin mining creates or uses mass amounts of energy which are generated by fossil fuel burning coal, which destroys the environment. What's the truth?
The truth is that we are witnessing some four-dimensional chess. I should caveat that nothing I say is investment advice, and it's my opinion, not that of my employer. But let's say the Tesla people, Elon Musk, they're pretty smart guys. But let's first unpack what happened here. In February, he bought Tesla bought $1.5 billion worth of Bitcoin. And he did say yesterday he's not selling any of that. What he is doing is retracting the right of clients to pay for Teslas with Bitcoin. Back then, it was very much a PR stunt, even enabling that in the first place, because if Bitcoin is a reserve asset, a hedge against fiat debasement, as they pretty much said with their purchase, then why on earth would people use it to pay for something? In much of the world, that makes sense. They don't have access to anything better. It's the better alternative that they have. But let's face it, the cohort that are going to be buying Teslas, they probably have better payment options available to them. They could use their Bitcoin stake to take out a cash loan, for instance, and still keep Bitcoin as the fiat debasement hedge that Tesla implicitly recommending that it was. So what are they doing here? What I think they're doing here is they're starting the conversation, or they're kickstarting the conversation up to a different level. This conversation is something that we've been seeing gaining some volume over the past few months as Bitcoin's price goes up. Obviously, the criticism will intensify. And one of those fair criticisms is that Bitcoin does consume, it is powered by some fossil fuels, some contaminating energy. But what Tesla got totally wrong in their statement is that that percentage is increasing. It's not. That's factually incorrect. It's decreasing. Bitcoin is increasingly powered by renewables. And I don't think Tesla would buy $1.5 billion of Bitcoin without at least getting some of their facts straight. So what really are they doing here? I think this is a four-dimensional chess PR stunt.
Well, and Noelle, as we try to unpack this, I think the reaction in Bitcoin has caught a lot of people by surprise because it is now under $50,000. We're seeing a big move to the downside today. Yes, Bitcoin is always very volatile, but do you think that this is bad news for Bitcoin, or is this something in a few days it's all just going to blow over?
I think it's in a few days it's all going to blow over, because one thing that's totally guaranteed, Shanna, is that in our industry, there's always a more fascinating story tomorrow. Just when we think things can't possibly get more interesting, they really do. And so we saw Bitcoin plummet on this because Elon Musk is a very smart man, and what Tesla does, we should pay attention to. But once people start to poke through the holes in this statement, they're going to see that it is nothing more than a kickstarting of a conversation that really does need to happen. Anyway, we have to also remember what else is going on. We saw the inflation figures come out, and they are going to hit risk assets. I mean, Bitcoin is often touted as an inflation hedge. I think it's more accurate to call it a fiat debasement hedge. They're related, but not necessarily the same thing. And with an inflation hedge, you do see risk assets get hit. That's also probably partly in play here. And the fact that Bitcoin has been appreciating quite handsomely since the beginning of the year, some kind of correction at some stage is inevitable. So part of this is probably the knee-jerk reaction to the Tesla statement, but only part of it. There's a lot of other things going on as well. And I think the Tesla statement really is no more than a PR stunt, which will blow over. It will have the effect of kicking the conversation about Bitcoin's energy mix up to a new level, which is very welcome by the Bitcoin community. You've seen on Twitter, you've seen on all sorts of media, people coming out to show that it is increasingly powered by renewables. That's a conversation that Tesla, I'm sure, is very happy to get out there.
Okay, the environmentalists watching us will be pleased by that. Let's talk about the investors. You just used the term that it's better considered as a fiat currency debasement hedge. We're about to borrow trillions more dollars, whether it's 600 billion or a trillion for infrastructure. So there might be debasement of the US dollar. Shouldn't we be seeing Bitcoin go higher? What might we be missing?
Well, maybe we can look at the fact that it is going higher, that it's not going down even more, given the inflation shock. The previous guest was talking about the inflation surprise that came out. And let's face it, if the inflation surprise is going to kick yields up, that is going to affect risk assets across the board. One of the things that has been powering Bitcoin over the past few months is that yields are so low that it doesn't matter that Bitcoin does not have a yield. We have the same kind of arguments generally, not recently, but generally powering gold as well. When yields are low, yield-free assets tend to do better, especially in the case when they're talking about limited supplies. With yields going up, then risk assets tend to get hit. And that's very much what we're seeing here. Longer term, however, as Tesla, I think, is reminding us with all of this, fiat debasement is the bigger worry. Fiat debasement comes through increase in the money supply, which nobody can argue is certainly happening at unprecedented rates. And that's where Bitcoin can shine.